So first you gotta understand the higher time frame. So the higher time frame we already have talked about is the higher time frame would be the daily candle, and the daily time frame for us, that's where we want to look for our bias mainly, and then we will move on to the structure of it and then the entries. So with the higher time frame you need to understand that we have the candle formation. It has an open, a low, has a close and a high. So as you see, this is the high time frame candle, and this is the candle on the 1 hour chart, I would say. As an example, there we see that we open, we go lower, creating the lower wick, expanding higher, creating the body, then we expand a little bit higher, creating the top wick, and then we drop again below, closing this candle, making a full 1 day candle. Now you're going to understand the intermediate time frame when you look to the time frame alignment PDF that I have set inside my Discord. If you understand that, you will understand this whole PDF, so make sure to check it out. Now with the intermediate time frame, we use it for structure, meaning after the higher time frame we have aligned our daily bias and the equilibrium of the range as talked in the previous video. We want to see the structure, meaning we're going to use an intermediate time frame. So if we use the daily time frame, we go to a 1 hour time frame. So we see on this time frame, we created a low, a high, closed above the series of down close candles, making a change in the state of delivery. So if I want the price to support the idea of me going to the upside, I want price after an expansion, retrace back into a PD array, and then look for continuation signatures around here. So if you remember, on the hourly, I use a lot the phases of price, and if you look all of the buys that I ever did in my Discord, I have always included continuation, reversal, consolidation, and expansions. So if you have looked on phases of price video, you will understand what I'm talking about on the intermediate time frame, and you will understand how to use it yourself. After we go from the high time frame, then we look for the structure on the intermediate time frame. Then we want to look for entries, right? Therefore, we know that around here, after we retrace into a PD array, around here, that's where we want to set our entries. So normally, I wait for a change in the state of delivery for a confirmation to the upside, meaning that we shouldn't retrace into the mean threshold of this order block. Then after this expansion, we retrace back again into a PD array, and after we make a close above this down close candle, making a second change in the state of delivery, with these new candles open for longs, I can expect price to go higher, stop loss in this failure swing, now take profit on our trial liquidity or focusing on 2RR. Now let's go through some examples. So as you see here, this is one of the trades I took and posted on my social media accounts. We have here the higher time frame. Well, this is the daily chart. We see that the daily candle has dropped below. Then this daily candle has printed a large wick. We have hit a higher time frame key level, closed back inside the range. Then we printed in respect of the equilibriums of the wick's size. We opened higher, meaning if we opened in respect to equilibrium, I'm looking for prices higher. So as you saw from the daily time frame, we go to the 1 hour time frame. That's again higher time frame. We look for bias. Intermediate time frame we look for structure. Lower time frame we look for entries. Therefore, on this hour time frame, we know that price has expanded. After the expansion, I expect price to do some form of retracement to a PD array. So for looking at changes state of delivery, if the 1 hour isn't clear, normally I will drop on the 30-minute or even a 15-minute. In this case, I've dropped into a 15-minute to look for entries. Now I've entered on the 15-minute too, because that's the time frame that I look for entries normally, 15-minute and 5-minute when it's closer to New York. 15-minute, it's the basic one, it's the one I use the most if the session allows it, but most normally you will see me post to the 5-minute. But as you see here on the 15-minute, it's also an intermediate time frame. Again, structure, we see that we have closed back inside the range of this consolidation, made an SMT. After the SMT we have a clear change in the state of delivery, Now I don't want to enter from the first change state of delivery. Sometimes it can be just a manipulation or a fake. Therefore, I'm waiting for price to print a little bit longer, retrace back into some form of PD array after this retracement, and making a second change state delivery, keeping in fact that I want to see the mean threshold of this order block respected, right? So therefore, we had our first, second change state delivery after going into a PD array. With the second change state of delivery, I can expect the candle to continue higher, therefore entering on open. My stop loss would be on the mean threshold, well, on this close, on the body of this down close candle, because the RR allows it a little bit more, because I can just risk a little bit less while having a good RR. In this case, this is a 2RR trade, because if I put in my stop loss on this failure swing, it's very far apart and I would need to wait longer, and not only longer, I would need to wait for New York session to print it out, right? In this case, to just be safe with my RR, I put it on this close of this down close candle body, therefore making this a 2RR trade, and basically that's it. So in this video you have looked and been shown how to use time frame alignments. If you want to access the PDF that I have about the higher time frames, structural time frames, and lower time frames you need to use, link in bio for my Discord. See you soon.